Good news for Canadian homeowners that the stress test that was introduced back in 2018 to restrict the over leverage, quote unquote, that is gone, at least for renewals. Okay, so when you apply for mortgage as a new applicant, you have to go through stress test. So if you don't know what is stress test, basically the bank or the lender will qualify you based upon the current offered mortgage rate plus 2%, just to be able to assess if you're able to absorb any economic shocks if the mortgage rates goes up. Okay, so that was the whole idea of introducing stress tests to make sure the borrower is able to absorb some shocks going further down the road. Okay, so this morning we saw an announcement from OSFI that from November this year they are going to remove the stress test requirement for renewals only. Okay, so if you are waiting for your mortgage renewal, then you don't have to qualify for stress test, provided you're not changing anything. So your amortization is same, your mortgage amount is same. So if you're not refinancing, if you're not taking the equity out, you're not changing the amortization, then you can avoid stress test at all. Okay, and you can also switch the lenders as well. Let's say if you are with RBC is offering you 4.5% for your renewal, and you have Scotia, for example, offering you 4%. You can easily switch the lender without going through stress test qualification. Okay, that's a good news. That's a big news and a big relief for homeowners who have fixed their mortgage rates 4 years, 5 years ago at 1.5% and now going for renewal when the rates are still above 4.5%. Provided if you're not changing anything. If you're changing your amortization, if you're changing your lending amount, like you're refinancing, you're taking the equity out, then it is considered a new underwriting. Then the lender will assess you based upon the stress test requirement. Okay, so understand the difference, right? It's just for renewal and it's just for the straight renewal. No changes, no amortization change, no lending amount change. Everything stays same as before. You're just renewing your term, then you can avoid stress test. Otherwise, you have to go through it and be qualified again. Good news, again, this is the federal government making these changes to attract some votes for the election, because everybody in Canada is depressed right now because of the financial and economical situation. Our savings are contracted, our expenses have gone through the roof, the Canadian dollar is tanking against other currencies and goods and services because the stuff that we buy is getting expensive because the Canadian dollar is losing its steam. Okay, so just a relief that they're trying to give to Canadians to buy some votes for the election. But anyway, this is a good news for the homeowners and a relief sign for homeowners so that they can easily renew their mortgages and keep their house. Okay, but this is for uninsured mortgages. Okay, not insured mortgages, uninsured, which means you have not taken any insurance from CMHC or other insurer. That is not applied on you. Okay, only for uninsured mortgages. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and check the links in the description below. There's some free stuff available for you, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.